Hi, everyone. I'm Stuart with Underway Tax Advisory. If you don't know me or haven't met me, I'm an EA. I'm the founder of Underway Tax Advisory. And I wanted to spend some time talking with you guys today about influencers and some of the advice you guys get. Obviously, I spend most of my time on the tax side of things, not so much on the content creation side of things, which you can probably tell. I'm sure a lot of you have a lot of advice you can give me on how to make these more engaging and entertaining. My son actually suggested that I do a tier list of all the tax prep services out there and rank them, but I figured that would probably get me a couple of phone calls I didn't want to deal with, even if it would get me a couple of views. But if you have any advice, if you want to give me some advice on content, feel free to send me an email, which I think that sentence in and of itself shows that I'm a little bit of a dinosaur in this space. When it comes to taxes, though, I can probably help you guys out quite a bit. I want to talk about some of the pretty creative tax advice I'm seeing a lot of influencers follow and how it actually plays out when you look at how the IRS and the courts evaluate those tax returns. You see a lot of stuff, everything from just post it and write it off, which is sometimes true, to, and this is a real one, somebody suggested you could bury a body in your backyard, making it a cemetery, and no longer have to pay property taxes. Obviously, that's a little bit extreme. It's not advice I suggest that you follow, but the pattern behind all of these different strategies and this advice is pretty common, and it's pretty easy to understand. A lot of the advice starts with an aspect of the advice that's technically true, right? And then it gets stretched into a conclusion. It gets stretched out to a conclusion that doesn't really hold up when you start looking at how the IRS and how the courts actually apply the tax law and the rules to the position that's being taken. I want to talk about it in a really practical way, not so much focusing on turning your primary residence into a cemetery, obviously, but real examples, how it actually plays out. Spend a minute talking about a court case that I think is a great illustration of how these rules get applied in your life, and go from there. So let's start where a lot of this advice comes from. You'll hear things like business expenses are deductible, or if it's ordinary and necessary, then you can write it off, or you can use it in your business accounts. And those ideas, they come from Section 162 of the tax code, and to an extent, that's absolutely true. But right alongside, there's another rule under Section 262, which says personal expenses aren't deductible. And most of the situations we're talking about, and a lot of the situations that influencers and you guys find yourselves in, live right in that space between those two rules, between those two sections. So instead of starting with the rule, let's start out with what you're actually doing. From the IRS's perspective, they're not reading your caption. They're looking at the patterns. What are you buying? How are you using it? And does it look more like a business expense, or is it something that's more inherently personal? And this is where that tax court case I was talking about is a great illustration for you. It's Hamper versus Commissioner. It's from 2016, and it's really helpful as a practical example. There was a tax court memorandum opinion. It's not binding precedent, but it shows really clearly how the IRS and the courts, how they tend to analyze this type of a situation. In that case, it was a television news anchor, and they, on their return, were deducting clothing and makeup and grooming expenses like haircuts and manicures. They even had their contact lenses on there. And her argument was pretty reasonable on the surface, right? It's probably pretty close and in line with some of the position you guys are taking too. She was on camera. Her appearance was definitely part of her job. Maintaining that certain look was directly tied to her ability to earn income. And that's what a lot of you guys are dealing with today. That's where that 162 section says this should be deductible. But the court looked at it a little bit differently. They weren't looking at whether the expenses were helpful or even necessary for her work and tied to her income. They were asking whether those expenses are those inherently personal, and should they fall under 262 instead of 162. And once you frame it that way, the outcome became a lot clearer from their perspective. For the clothing, they acknowledged that it was required for her job, but also it was suitable for everyday wear. As they said, even if you choose not to wear something outside of work, if it can be worn as normal clothing, it's still considered personal. They applied the same reasoning to the grooming, to the personal care, so haircuts, makeup, manicures, contact lenses, all of that got thrown out as well. And even though they clearly supported her professional appearance, there's still those same kinds of expenses people incur in their everyday lives. And so the court treated them as non-deductible expenses under 262 and not business expenses under 162. And this is what makes that case so relevant for a lot of you creating content. Because when you really look at what influencers are spending their money on, it's not that different from what the court was looking at in that case, right? It could be designer clothing. It could be Gucci. It could be Louis Vuitton, things that show up in your content, but are still at the end of the day, normal wearable items. It could be makeup from MAC, where there's a clear business use. You could be doing reviews, but it also overlaps heavily with personal use. Same goes for hair, grooming, overall appearance. High-end items like Birkin bags or home and lifestyle purchases, like if you go on a big shopping spree from Pier 1 or Saks, right? All of those can absolutely support your business. They can help you to create the content that your business does. It is directly tied to it. However, under this framework, the question isn't, does this help me make money? It's, is this fundamentally personal in nature, right? So let's talk about a modern example. Let's say you're buying really high-end skincare or makeup products and you feature them in your videos. There's real business use there. Those are also products you could or would likely use personally, whether or not the business existed. And that's where that 262 argument starts to override the 162 argument. Same thing with clothing. If you're buying outfits specifically for your content or receiving them from brands as part of a deal, those same outfits could just as, if those same outfits could just as easily be worn out to dinner, to an event, or in your day-to-day life, that's where those issues start to show up again. And because of this, it's generally going to be treated as personal if anybody's taking a look at it. And that's true even if the clothing came in as part of a brand partnership, because at that point you might actually be dealing with some income first and then a personal expense on the back end. Even if you only wear it on camera, even if it's part of your brand, your aesthetic, what really matters is the nature of the item itself, how it's structured for you, and not just how you use it. That doesn't mean that everything in that category is automatically disallowed. So there's a couple of ways that you can work around it. And sometimes it's not even an issue. So it's a little bit nuanced. And this is where some proper planning comes in. If you're dealing with things that are clearly outside everyday use, so you're talking about like stage makeup, or if you have a sequins Elvis jumpsuit or a full set of medieval armor, it's a very different category, right? Those are not going to be in that inherently personal category. We don't have to worry about those so much. One option you might think about is to deal with those products in a way that looks more like inventory for your business. You acquire them for the content, you use them in that defined way to create revenue that's directly tied to it. And then at the end of that, you either resell them or you dispose of them. And now you're starting to build a bigger, stronger business use story. There's also where substantiation and consistency matter, right? It's not just what you bought, it's how you treat it. Did you track it? Is there a clear connection to your revenue? And maybe most importantly, as we've talked about, did the behavior match the position you're taking? Because at the end of the day, the IRS is looking for a coherent story that lines up with the facts. So when you step back and look at all this together, we know that section 162 says if it's ordinary and necessary for your business, it may be deductible. But 262 says if it's personal, it's not. And cases like that hamper case show how that line tends to get drawn in areas where the personal and business uses conflict with each other. So a lot of the advice out there isn't completely wrong. It just leans really heavily on that 162 side of the argument and sometimes completely disregards the 262 side. As your business grows, this becomes less about trying to stretch every single deduction and more about having a clear defensible plan, using proactive tax strategy to reduce what you owe in a way that's actually going to hold up. Your deductions, your documentation, your behavior, it all points to the same direction. So if anyone ever looks at it, it doesn't need to be explained. It just makes really sense. A lot of it comes down to alignment, how you're using something, how you're tracking it, how you're reporting it should all report in the same direction. Obviously, this is general information. Talk with a qualified professional about your specific situation. If it sounds like something that your business is dealing with, feel free to reach out. If you've got a scenario you're unsure about, drop it in the comments. I'm happy to take a look, and we'll talk soon.